Hi, Warriors. How's everyone doing? Weaker dollar, weaker stocks, sharply higher metals. Everyone doing okay? Hi, Mike, Ingmar, Shahab. How are you? You've been around for a while, Shahab, haven't you? Okay. Kay, how are you? Heidi, hi. AJ, Steve, Astra, how are you? James, hi, Blake, Mike Green. Thank you, Mike. Did you score? How are you? How are you, Ingmar? How's it going? John Hawkins. Oh, Javier, welcome from Argentina. You're going to have to catch also catch some of our, you have to catch some of our Spanish webinars that Leandro does. Okay. Anyway, let's go to work. What do you say? You ready?
We are so ready, Coach. Good morning.
Uh, are you ready?
Like Brand says, we are born ready.
We were, our whole lives have been preparing us for today's trading.
Exactly.
Okay, so we have some dollar weakness continues. Interesting. It might be some type of formation. I don't know if we're just going to blow from here or
Yeah,
get some type.
you're
Go
not
ahead.
sharing your screen, buddy.
Oh, wonder why. Yeah. Too many things on my mind. So there it is. So 109, 111 would get you 113 on a breakout over 11. Uh, what are you thinking here? Dollar just continuing pretty weak rally last week. Unless we're going to put in a higher low, it is stronger than the yen, which was a pretty good short too. I didn't ride it all the way down here, but this was a pretty good short. You know why I got out, Kman? Yeah, I bet you know why I got out of my yen shorts.
Because you need to take money where it is.
And this really has thrown me.
Yeah.
I mean, what happened?
I think it is. There's a lot of talks about people getting out of basis and spread trades.
Yeah.
But I mean, it's just a mixed bag of everything, debt servicing, inflation worries, credit spread
Oh,
widening.
yeah, yeah, everything. Well,
It's a
well,
bag
this
of
this move exacerbates it.
yeah, but it's a bag of a load of crap. And if people need to get out of everything, these are the kind of moves you get,
Yeah.
go to 390 on growth worries, and now you go the completely opposite way. I think it can continue for a while, but I'm not sure it's going to be as dollar supportive as would be otherwise. There's a lot of bad stuff happening, so I don't think this is really dollar supportive. Now, we have to be selective as well, because I mean euro, yes, yen, yes, and actually, by the way, we are testing that 144.5 support again on dollar yen right now. Swiss as well, yes.
Diverging. Yeah.
Yeah, the rest we need to be a bit careful. Because there's a lot going on in risk as well, and all the risk pairs are getting dragged around again, and getting sold off, actually, the risk pairs. Yeah, the market is not in a good place right now. But last word, and I've been talking about that in our room as well. Last word, I think once people are getting out of those positions in bonds or so, I think we we may actually go massively the other way around again when when the worries about growth are going to rear their ugly head again. And I think we need to be very careful with having too much directional positions in the bond market right now.
Well, if you have it on any direction after this, I'll tell you what, if there was ever a reason not to believe in being long bonds again in your lifetime,
Mm.
it's a 40% risk off move in NASDAQ, 20% in S&Ps, and this is all we generated. These are not your father's bonds or your grandfather's bonds, which I would be. to some of our younger traders. We would have had limit lock moves in bonds. I've seen it several times during market swoons that the bonds just explode. You get 2 point moves or more, and just the first day that the market rallied, gave it all back. So maybe we have a sovereign bond crisis on the horizon here.
Yeah.
We're going to have our gilt moment here in
Mm,
the U.S.
yeah. And people are indeed talking about it. And the question that we have to ask ourselves then is how far are the central banks away from stepping in, you know?
Yeah.
Because if this
Uh,
continues, they are not going to like it.
They're
Hey,
never
have you
far
have you
away
got
from stepping in.
well, we're going to have Joseph Yang here today, so we'll ask
Hmm.
him. How about that
Right.
for timing? I just want to show our community how one of the ways I use the site. Okay. So, I'm an amateur Elliotician and Greg is a master. So you guys know I'm trying to bottom pick crude, which is, I'm doing it with options or I'd be broke right now, right? So uh what I should have done and what I usually do is I take a look before, but I'll admit it. Sometimes after tell me if you guys have done this. You put on a position, then you go around looking for support of your narrative or your view from different people to give you hope. Well, an alternate count from Greg does give me hope. I don't know if he thought we'd go 56 or, we're challenging 55 after this breakdown, but this could be a count that sets up for, you know, he's calling this an A wave all the way from this was the invasion of Ukraine. So we really never had one real good correction. Maybe this was a good correction. Had nothing on the way down. Take that into account, S&P traders. Never got that rally until it really bottomed. Then you got a rally and then a grinding bear market. But you could go there and check it out. I wanted to see what Andre was doing here too, see if there were harmonics. So, uh, you know, you could also just follow traffic lights. I was talking to Jim Welsh, and he told me he watches a 1 minute chart, Blake, on during the day, and
really,
yeah,
Jim? How's that not give him a heart attack? Dude, it
I
gives
don't
me a
know.
heart attack.
I don't know, but he, especially with this recent volatility, and he has this. You could ask him Friday what moving averages he uses for crosses. And the other day I was talking to him. He goes,
Cancel.
Dale,
Dit jou rennen.
it, all you have to all you have to all you have to do.
I muted him. Don't worry.
Okay, all you have to do is trade the crosses of these moving averages, and you would do quite well.
You,
So you don't have to be like that guy from Yale. What's his name? You don't have to be an economist. You don't have to be a GAN person. You could find one little technique that could work for you. Anyway, so traffic lights are, you know, they're simple, but they're powerful. You have power lights. You don't run red lights, do you? So, and when there's a lot of agreement on the team, I look for that too. Okay. When there's diverse opinion, it's not confluence to me. But like right here, the S&Ps, you have four red lights, and they've been on there for a while. So anyway, I wanted to show you guys one of the ways that I use it, and you should be using it too. One thing I did notice, with a dollar route here, and I'm waiting for this, I'm going to do this trade. One more low in Aussie. Here's drive one. Here's drive two. Give me one more low in Aussie, and I'm going to try it. I know it's the weakest thing out there, but you know, I can't avoid trying a formation like this. Not
Hey,
for,
Dale,
go ahead.
Dale, can I give you an example here? I
Yeah,
actually
go ahead.
sold when the Chinese headlines came out this morning. And I actually sold Aussie right here, like literally 60 cents at 6.6005. I sold it. I mean, I covered it basically for a pip or two, like a couple minutes later, because there was no follow through. But it's interesting how these Chinese headlines are coming out, with their 84% tariff coming back
Yeah.
at the US. And it feels like to me that this market's getting a little, fatigued on some of these headlines. And I don't know. I mean, I don't know if it means anything necessarily. The response that we're getting is much less. Have you guys noticed that, Kman? Have you noticed that too?
Yeah, and if you look at the updates we made on our webpage, they all go in that way. I think there's both on the Aussie and the Kiwi. Could not be a false breakdown because there's so many headlines coming, but it looks like both on now on dips are starting to find demand. And we had a quick break on the Aussie and it bounced. We had a quick break on the Kiwi and it bounced. So I think that's interesting enough to start monitoring.
Yeah, so it really is, and Dale, I want to ask you this. We had this, obviously we're seeing this huge move in yields, and I tell you what, I went to bed last night, and I know I sent out a tweet, and I'm just like, hey man, we could have our Liz Truss moment. I mean, you're seeing stock market futures were at their lows. They're at levels they were here. They were actually here last night. We were like right here last night when I went to bed. Um, we had the S&P futures were at their lows. You had yields at their highs as the bond market's getting crushed, right? So you had yields where this is where it was at last night as I was going to bed. And then you had the dollar getting crushed. And one of the things that as a market participant of, 3 decades, I've always said to everybody, like this is not a yesterday comment. This is not a COVID lockdown comment. This is even ahead, previous to the GFC. I'm like, man, the day that you see stocks come under pressure, bonds come under pressure, and the dollar come under pressure at the same time, we really need to start worrying because this is a loss of confidence. And that's what we're seeing right now. I mean, let me ask you, let me ask Kman. Kman, have you ever seen that? And how's it make you feel to see the dollar, every
Mm,
asset in the dollar, every US asset being sold
mm.
across the board?
Confidence crisis.
I feel like I live in Argentina, or
Right?
Yeah.
we're going to be living in Argentina, and I'm
Mm,
haunted by the financial crises they've gone through. I forgot which one, they've had quite a few, but they had like a burgeoning upper middle class for a while, and it actually showed these guys in a brand new Mercedes driving around, and when they saw cattle in the field, they jumped out of their Mercedes to go get dinner. Okay, because they I'm not lying.
No, that's
Okay,
funny though. It sounds like a
but
crypto trader.
yeah, I mean but
Anyway,
it's not funny anyway,
no,
because
it's not. No.
their wealth disappeared like overnight from currency devaluations. And this is, I don't know if we're going to do an outright one or they're just going to let them do it through the market. But, you know, I know guys that think before it's all over that Dixie's going to be at 50 something.
And that's I mean, so when you say that, and look, we should hear. I want to hear what Cayman has to say about this too. I actually bought the euro last night. I bought it at 110.28, and I mean I bought it last night because I was thinking, shoot, man, I could get up tomorrow morning and the euro could be, this, I'm obviously I got to sleep. We all got to sleep. I was like, I think I could wake up and this thing could be trading at 112, one
mm,
thirteen. And I thought there might be some runaway freight train. Now, fortunately, I got up this morning and it was up 6 pips, and I just took it off, and I'm like, okay, it didn't do what I was preparing for, but I didn't lose money. So I got up and I'm like, okay, I can get my head on straight this morning. But it was pretty scary price action last night
Mm.
when I was going to bed in Asia. Ryan, sorry, Kman, how do you feel about this? What we're seeing right now?
I,
What
I
does it tell you?
Yeah, I think if for as long as we're above that 108.90, 109, I
Yeah,
am looking at an very erratic move higher, but it's going to be erratic because at the same time that you have those confidence issues with the US right now in the US markets. There's also stronger and stronger calls, and even by the ECB members themselves, apart from Holtzman, to cut rates. So I really think that is going to be erratic. I think we are going to go for, as I said, for as long. To me, the level is 108.90 figure right now, but it's going to be erratic. We need to be ready for more moves like what we are seeing now. You're going to test nearly 111, then
Yeah.
you break down back down to 110, and now we are at 110 and a half. Yeah, but it's and in the meantime, the move that we initiated is still kind of holding, right? And for
yeah.
as long as there's this confidence, lack of confidence in everything in the US, the euro should be together with the yen and the Swiss be beneficiary.
And
It's funny. Oh, go
cable
ahead.
is sick. It looks like a bear flag after
Risk,
a straight line
risk,
break.
yeah, risk. And I'm not. I was actually long cable, but I let them go this morning because I didn't really have enough confidence to keep them. And then you see whenever risk gets hit, euro sterling is on a fly, and
Yeah.
that is giving me less confidence in the sterling right now. But we
All right.
are still holding the range. It's 127.10.30 up to 128.60. We are in that range. But yeah, euro sterling is doing a bit of damage for the
It's a
cable.
home
That's
run
why
ball. It's a home run ball.
In gold, I've been looking for this, Dale. This is your throwover, right? You see the red channel. It's a throwover. We bounced pretty good, and obviously we're back at resistance right now at 30.60. That's where we're currently trading.
I'd
I
sell it
mean,
on that
gold is
rally.
catching that uncertainty bid, right? And
Yeah.
I mean, how do you feel about gold here? Because I'm bearish. I'm bearish on the technicals, but I have no like fundamental reason to be bearish. How do you feel about gold? Because it's like whenever there is like mass uncertainty, you catch a bid, and that's what's happening right now.
All right. Well, I was trying to think what would be the one bearish case for gold, and we didn't have it last week because we all thought yields were dropping,
Yeah,
right?
and then
Okay, so
yields
that's
just yeah.
right. So I'm a seller around that 80 level. I'm going to try it there.
Are you?
Yeah.
But what happens if yields in like the 30-year and the 10-year just blow out to the upside? I mean,
Then I'll get stopped out.
yeah, yeah. I mean, it's a tough one. I mean, gold, like I
It's a
said, I
I'm
think
going
that
to yeah.
there's a lot of reasons to sell it technically, but man, that's a tough trade.
Isn't
It
it
is.
still crowded? I mean,
Oh God, yeah,
there aren't a
yeah.
lot of gold bears out there, are there?
No,
Hey, you
no.
ever
There's
you
no
hear
dollar. There's
anyone
no dollar bulls either.
uh true. Yeah.
Or maybe there's maybe the
There
last
were
few
before
that.
this break. There were people were getting long the dollar into the tariff announcement. That bounce last week was about that.
Yeah, this is where you start shooting holes into the milkshake theory. You know what I mean? This is where
Yeah.
the people that are the holdouts, the people that follow the idea of Brent Johnson that you're gonna have this dollar resurgence when there's a liquidity issue. I just don't think, and I know we've been saying this for the last several months actually. I don't know if that's going to be the case this time around. And you can
Yeah,
clearly
not
see
with
it
the
in the
US in the
dollar.
epicenter of the problem.
Right, right. And hey, Steve, we heard you a little bit earlier, but I had to put you on mute because you were having some Greek conversations, and we
Oh,
were we were picking up your microphone.
Yeah,
So
don't yell at your wife like that anymore.
yeah,
No,
I mean,
that-
dude,
On
that
air.
was really, you
Huh?
should slap her, really. Jeez,
Yeah.
that
right,
was the
Dale?
nanny actually, and I didn't
Oh.
yell at her. I was asking her how come
Oh, you God.
In Greek, it all sounds like you're yelling. You guys are very vocal and
You're
and
confusing
arms flying.
Greek with German.
And
Yeah,
you're
right.
emotional too, very emotional people.
You're very emotional. Dale and I might be partial Greek as well. Hey, Steve, how do you feel about the dollar? Let's talk a little bit about the dollar being the epicenter and why won't the dollar benefit from, this risk aversion that we're seeing?
Because this currently um, involves the developments in the US, and as you said, it's premature to call it, but there is definitely the potential for confidence crisis in the US. I mean, the basic building blocks have been there for a long time, right? The exploding deficits, the exploding debt, the exploding debt, and most importantly, after we got the inflation issue, the exploding interest rate payments, right? So all those have been there, but as always, the market tends to ignore stuff for too long until one day there is a trigger, and in this case, the trigger can be the developments with the US switching to a protectionist, economic approach. And of course, the side effects that this creates, right? Other countries now targeting the US, as countermeasures, etc. So this might end up being the trigger for such an event. I still think that it's not the most likely scenario because I do believe that the Trump administration is going to do what it usually does, is that they're going to, after playing hard, they're going to settle for anything, like it happened with NAFTA. If you remember the rebranding of the NAFTA agreement,
To
right?
USMCA, yes.
Yeah.
That in essence it was 97, 98% the same agreement. They changed the name and some extremely minor elements, and then they produced that as a victory that, the most unfair agreement had now been transformed to the best trade agreement the US ever had, which of course was not the case. So I'm suspecting that at the end, they're not going to risk it all. What they're going to do is that they're going to reach some kind of apparent agreement that changes things while it won't have changed practically anything. And everybody's going to call it a day, and Trump will be able to sell to his audience that, oh, look, I put them all on the table.
But the damage is done. But the damage is done, right? You can't
Some
repair it.
Some damage is definitely done. Now, is this going to be the beginning of a larger event? I guess it all depends on how fast they wrap it up. The longer it takes to control, the higher the probability of something bigger coming out of it.
Throw
Well,
a
yeah, I mean,
throw a
go ahead, Dale.
military strike on top of this against Iran. What happens, Steve? Might be bullish. Right?
Depends. That's always a good distraction, right?
Yeah, that's right.
Yeah.
Did you say good distraction or destruction?
Distraction.
Both.
It's part of the playbook people, leaders use during recessions. And
yeah, although to be fair, because I want to be fair with him on this, Trump has so far proved that he doesn't want these type of conflicts, right?
It's theater.
So
we'll see what happens. I'll bet you $1. Oh no, that's too much. I'll bet you a Coke that nothing comes out of these talks on Saturday. You want to risk a Coke?
Might be the case. It's likely. I know. I won't bet against you in this. Okay. No, I won't bet against you. I don't disagree.
Right. Not even for a Coke? Would you buy me a
Okay,
Coke?
okay. I'll buy you a beer, a Coke, whatever you choose.
Thanks,
So,
man.
hey, just you think about this game of, we called it yesterday, on our shows. It's a game of chicken with China, and this morning, China, announces an additional 84%
Yep.
tariff at 4. Well, this is 4 o'clock my time. It was an hour and a half ago, Dale.
Yeah.
I mean, this is going back and forth, and how heated is this going to get? Kman, what do you think as far as this back and forth with China, this chicken, who's gonna flinch first? What do you think?
Wow. For the time being, nobody flinches because we heard from Besant, we heard from Trump that any retaliation from China is no bueno, and the Chinese are still saying that they will fight till the end. I mean, at this stage, I have no clue who is going to flinch first, and for as long as that lasts, it's going to weigh on a lot of stuff, you know.
Yeah, but we all know which of the two countries has the type of government that is more likely to succumb to political pressure, right? And
Yeah,
that is not China.
no,
Right.
but you're not talking about your average U.S. president either. This is a guy. He's a gambler.
Yeah,
People
high
say
risk, high reward.
he calls himself a deal maker, but he's a gambler, right? And he gambles that everything will be all right.
Yes, but in this case, if you want to continue the analogy, the gambler is playing against the casino,
Mhm.
and that's never a good idea.
Yeah.
No, no. Well, I tend to agree with what you say that they will flinch first. And then we are going to see opposite moves in the market of what we are seeing right now. We had a bit of an example, right? When there was that rumor about that 90-day delay, that fake rumor in the end. But we had an example of what can happen if they effectively scaled back. Yeah, then we're going to have moves such in such way. The thing is, the risk in the market now, I think, is that they are saying, but whether it be Besant or Trump or whoever says it, there are like 50, 70 countries already calling them, under which Japan and South Korea to negotiate to arrange things. The risk is that the market will start to take such kind of deals as positive, but we all agree that the big blocks will be, well, first of all, China, obviously, but then also what's going to happen versus Europe, right? Um, I think we need to be extremely cautious right now, right now. But I will say, and we've been talking about that in our room with the guys in the Flowonomics room, in the fundamentalists room, that after we see this kind of unwinding that we see on the bond market and stuff, I think there is going to be a next stage, and that will be when growth worries really come back. I think we maybe not today, maybe it has to wait next week or the week after, but that we are going to see a massive move back to the other side in the bond market or in the yields market at least.
Well, we got about 2 minutes before we go. So Dale, what are you going to be looking at today? Where's your focus?
Well, I booked short dollars. I'm tempted to buy it for, like, that wave structure you just showed from Greg on the dollar. I
Yeah.
could see that happening. Get a C wave, one more rally up to 104, and then we get the big drop. So,
Got it.
I covered.
Okay.
I'm not buying it here just in case there isn't a 4 and it just pukes.
But you're on the hunt for one. Okay.
Yeah.
Man, what are you thinking today? Where's your focus going to be?
Well, for the time being, I'm still nursing my long dollar China.
It is holding.
Well, it's coming back a bit now
Yeah.
because the PBOC said that they won't let it go immediately. Yeah, it's coming back, and the dollar is trading softer again. No, I'm still on the other side on gold. I still think that we may see that leg higher, but takes 2 or 2,000 to make a market. But I am getting interested in what we were saying about those moves in Aussie and Kiwi. Give me another drop in either of both of them, and I'm going to be looking at it closely.
I'm with you. The 3 drive on Aussie. Yeah, I'm with you.
Well, actually, we're too far away for me regarding this with the Aussie N. I have orders out for the remainder of the week.
Look at that.
Yeah. I'm going to try to pick it up on the 161% extension, which is it's 400 pips away. But in this market, we could see 400 pips. That's not a tall ask in today's environment. It's far away, and we will have to be absolutely in toilet bowl drain movement for us to reach that. That would be, S&P's trading at 4,500 type of thing. But I think if you talk to your guest that's coming up, Joseph Wang, I bet you he probably feels that that's not a target that's unachievable at this point in time. So that's why, I have to start looking for extremes here. Steve, you as Dale's getting Joseph Wang, you guys make sure you stick around for Fed Guy. It's going to be an awesome interview. Steve, as Dale's finding Joseph, anything you're watching closely today?
I found him.
You did. All right.
I mean,
he's right.
Everything is is currently in the spotlight, right?
Right. That's true. Okay. Well, we're going with everything.
I mean, where do I begin? It's you're asking in a day that the market is like going nuts on all fronts.
Right. Yeah. I was just wondering if there's anything in particular you're looking at. There's a lot of stuff that we're focused on, and let me stop by saying that if you want to know exactly what we're trading, you can just go to the Forex Analytix chat room right in here, right next to your name. Up at the upper top right hand corner of the screen, go to the chat rooms. You can see there's the trades room. You want to know that I sold the US dollar Norwegian krona this morning at 11.01, or I'm starting to trade the dollar Mexican peso on the short side. That's in there. Obviously, the general chat room and the Flowonomics room is where all the conversations are really happening. And remember, we're going to have a very, 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 very big sale going on, to counter these tariff moves this next weekend. And it's the lowest prices that we've ever brought to you. Lowest discounted price, percent discount that we've ever brought will be this weekend. And we decided to do that last week after Liberation Day. We're like, man, this is going to hit consumers globally, so we're going to do our part. So that means today's the best day to take your $1 trial. It's only $1 for 10 days. Try it out, because when we enact those prices next week, you're going to want to take advantage of them and lock in the low price, because we grandfather people in. We've had people that have been clients since we launched 8-9 years ago, and their prices that they have are much lower than our current prices, and we've kept it that way since we've launched. So with that being said, Dale, have a great interview with Joseph. Kman, great job this morning. I love getting cut up in the flow show, especially when there's mayhem out there. Steve, it's great to hear your voice, and I'll see Steve on the Morning Edge in approximately 45 minutes. And Dale, have a great interview with Mr. Joseph Wang, because I love listening to his weekly video.
His videos?
Yeah, I listen to it every Sunday. So I think you guys should too. He's a wealth of knowledge that we have here today.
Yeah, and get ready. Your brain's going to feel empty after I'm through with you, Joseph. I'm going to pick it. Anyway, so welcome back to F.A.C.E, buddy.
Hey guys, great to see you guys again. Thanks for inviting me. What
Yeah,
a day, right? What a day.
I want to acknowledge it. Yeah, I want to acknowledge a few things. Last time when you were with us, one of your strategies was to short USD CAD and buy natural resource stocks in Canadian dollars. And, we had that huge run in gold, and you only took 1 day of heat on the tariff day, right? Where was that, Joseph? Because pretty much you were there at the top if you put up with this heartburn this day. What'd you do this day? I'm curious.
I don't remember, but that looks like an ugly candle.
Yeah, well, you know, you were short in Canada, looking for a top, and that was before. I think that was the tariff announcement, one of the tariff announcement days, and that was definitely it. So, yeah, the Dixie, the dollar topped on that day, everything topped on that day. So, nice call,
Thanks,
nice
Coach.
call. You still with it?
I don't have the only position that I really feel comfortable in today is just long gold, and I'm doing this
Okay.
through options on futures. I don't know, today volatility spiked a lot because we had such a big move, but that's
Yeah.
how I've been playing this so far.
Okay.
You know, what I'm noticing right now, just looking at the market at the moment, is that the equity market is actually behaving better than I thought it would. So we have this big escalation, but looking at the futures, it seems more resilient than I expected. So I feel like that's you know, I, good news, even though
Yeah.
I think that
Have you
there's a
covered
lot of
shorts? Have you, I mean, this was a hell of a break. You came on record before the break of calling the top. I know you do a lot of things through options. Um, were you,
yeah. So
let's say,
I was really
did you have the
short.
composure to ride it all the way down here?
No,
Sit,
no, no, no. I
yeah,
was really
that's
short
hard.
heading into Liberation Day. And I
Yeah,
covered on Thursday, the day after, only to see it continue to tank Friday and
yeah,
then to tank the following
yeah.
week. So, man, I think about how much things could have been if I just held on to those puts. But
I know.
that's how this game goes. So that
It's like golf. Do you golf? It's aggravating. Anyway, I gave up golf because I said if I want to feel aggravated, all I have to do, I do that during the week. Trade, you know, you get the tough money, and then you're it's like sports. You're an hour off or a day off, and windfalls come. But you don't think that even though we're stabilizing here today, that this could be forming a significant low down here? Because there is a lot of confluence of support here. I just don't like the way it got here. Uh, you know, when you have momentum like this, right? That
yeah.
markets usually don't bottom with confirmed lows, with especially an 11 reading on the RSI.
So I don't have any short positions on equities, and honestly, it's kind of been a whipsaw here. So, you know, like many of you, I basically make my living off the market. So there's always an impulse to want to try to want to
Yeah,
play with it, especially since the range is so large. But so I'm thinking about it in a couple ways. So on the further downside view, and I think the bottom is not yet in. I'm looking at what's happening in the bond market, and that is really
yeah,
concerning. So it does seem
it
like there is
is.
increasing instability in the bond market. Now that could get out of hand, and if that were to happen, we could have, you know, serious downside in equities. But on the other hand, when it does get out of hand, I would expect the Fed to come in and do something to kind of calm it down a little bit. And when that happens, you could easily have a huge reversal. So there's, you know, that huge uncertainty there makes me not want to have a position in equities. And another thing to keep in mind is that if you look at, you know, the VIX volatility, you know, you could
Yeah,
have any moment, you could have the president come and say something a little bit more positive, and that could easily have people come out and monetize their hedges, you know, sell down volatility, and you could have this face ripping counter trend
yeah.
rally, right? Like we saw yesterday, right? That was just enormous, right? And it all faded away. So
So,
the
you know,
volatility is
yeah.
just
So
so
do you
large
think
that
it's
I
a,
don't really want to be able to have a position right now on equities.
okay. All right, because it feels too late to get short and too early to get long. So you do nothing.
Yeah, I think that's a good bet. But gold, man, gold looks really good. And you know, we have these big tectonic shifts in geopolitics happening. So
All right.
that
I
tells you
think it
everything.
topped. I think it topped. But you could be right. We just had some massive divergence up here. I'm looking at the gold silver ratio. I think we're going to have at least ABC. One more wave like this could take it down to 27.5. But
So you
you
think
know,
we're
we
going to
get
go
through.
up? Okay.
Huh?
So you think we're going to make a new all-time high and then go back down and correct, or do you think
No,
that
I
will be
think I think we
resistance?
made
Ωραία.
I think
Ακούω
we
όμως
made
το
the high
webinar στο
for
οποίο μιλάει ο άνθρωπος.
we made the high for a while. Steve, can you
Okay.
mute, please? That's just my view, and I'm wrong all the time. So where are you at on the dollar? Continues to weaken. Does the Fed care about the dollar and what it's doing with yields going up and the dollar still falling?
So I like the yen against the dollar. So
Yeah,
USD JPY going lower. We have a risk off
right.
event. We have what
Yeah,
I believe to be more rate cuts coming from on the US side. So that should help on the rate differential. So, I could see the USD JPY go down to, Coach, I've seen you mention 140. That seems totally reasonable to me as well. On
okay.
the other stuff, I don't have a position there. It is
Euro.
concerning that the U.S. Basically is behaving like an emerging market. You have
Yeah.
dollar weakening, stocks down, bond market selling off. That is really concerning there. Now, one thing I think we should just keep in the back of our head before we, go into any galaxy geopolitical views about how the global order is changing, that you do have some geopolitical risk that could happen in places like the Middle East, and
Yeah.
if that were to happen, and that would definitely get people's attention off what we're seeing in the markets.
And isn't that what a lot of leaders that kind of have that strongman image that you fall into, you have a growth scare, you have a recession, and to distract the population, even unify it, they find some kind of battle, military conflict. I think they're going in this month.
Yeah, that's definitely a very common playbook for people for I guess more populist governments. And
Yes.
there's a lot of talk about Iran and so forth. The
Yeah.
president is having, well, not the president, high-level negotiations between Iran and the US this weekend. Basically, they have to give up nuclear weapons or the US is going to attack them. So it's a really aggressive negotiation.
Do
And
you want to bet me a Coke that nothing comes out of it?
I don't know. I don't know anything about, well, I
Not
don't know
even a
enough about
Coke?
this.
I
No,
can't
no,
get anyone to bet me a Coke
I don't
today.
know. I don't know. I don't know about this. Some people tell me who follow this closely is telling me that it's going to be a tough negotiation because
Yeah,
I think the U.S. wants what they can't give and vice versa.
right. So what do you think about the Saudis also raising oil output before a potential geopolitical event that maybe won't have as much impact? But this is crude breaking down. I'm trying to bottom pick it.
So
So
I remember the president's speech in January where he went before the World Economic Forum and said that my plan is to get inflation lower by lowering energy prices, and I'm
right,
going to ask OPEC to pump. And I
yeah,
think the timing of the announcement of OPEC increasing production is curious. It's right after Liberation Day, so it seemed like there might have been some maybe even
real
coordination.
cool. Yeah,
So it could be because that, just in case we have this geopolitical thing, we want to make sure we have enough oil. And I don't think they
yeah,
know how the negotiations will play out, but they
yeah.
do know that we're going to have Liberation Day. And so maybe lower oil prices could help with the upward pressure in inflation.
The president believes that Iran was behind assassination attempts on him. He's said it. I'm not making it up. So let me ask you this. Does he portray qualities of mercy and forgiveness?
So when I look at the legacy media, it seems like every now and then they plant stories, like in the Wall Street Journal or so forth, about, Iran bad, we got to do something about this and so forth. And there's always been a lobby within the US
Yeah,
that
the
wants to fight
neocons.
Iran.
Yeah,
Um, it looks like the president is maybe being influenced by them. And so I don't know if this assassination attempt actually is by Iranian agents. Of course, that would be something helpful if you wanted to fight Iran to tell
right.
everyone. So
Right.
Yeah, I think this is a worrying development in geopolitics, right? We don't want to have more war, but
No.
that is a possibility there. And if you have so much commotion in the markets, it is a convenient time.
Well, Joseph, you're a student of history. When it used to be wagons, and then it became trains and trucks. When they're not going across the border, exchanging goods, and those roads empty out, troops replace them.
Yes, that is how things happen historically, not just anywhere. I mean, now that
Yeah,
people are even talking about Taiwan being more of a geopolitical hot point, since that
yeah.
there seems to be some decoupling between the US and China going
Well, it
on right
doesn't
now.
help when our vice president calls the Chinese peasants. They uh, actually are amplifying it instead of censoring it. So, just to continue to enrage the population against America, we give them the fodder. So, anyway, don't you think that now in this market, and you and I have been talking for a while, but we haven't talked where we've seen credit spreads blow out like this, that even for pros, right now, that it's a very dangerous time. I've been telling people not to have a position mentality right now, but to be more of a guerrilla warrior, lower your time frames on your trading, and maybe look for 2 to 3 day type of trades. What do you think about that method in this environment?
Well, I think we just got to be really cautious. I agree with you. And just sitting down, going out, just having a beer or going on vacation wouldn't be bad either, because
Yeah,
it's going to be driven by headlines and geopolitics and negotiations, things like that. And I don't think anyone really has an edge there. But one of the
yeah,
things I think about though is that some of these things that have good yields, maybe that you could, in the event of a liquidity event, you could buy them for yield, not for capital appreciation or anything like that, but
right.
just for income. So, um, that's something to think about as well.
Okay. Did you see Gunlich the other day?
No, what did he say?
Let's
Oh,
see.
wait, did he say 4,500 as his target?
That was
Okay.
and back then it was 60% chance of a recession. Now that's higher, and now he's making a case for 3,500 in the S&Ps
I don't know.
in
That
this
that
environment.
that
I
seems a
don't know
bit
either.
that seems pretty low to me. Um,
Yeah. Well, it's only back to the October lows of 22 before we went on that parabolic run. So, it's still higher than COVID. So, but
I mean, if it got
what,
to the low 4,000s, I would buy even if it were not the
yeah,
bottom. So,
like
seems really low
here.
to me.
Yeah, so that's going all the way back here.
Yeah,
There is a technical case for it though. Okay, just like
okay.
there was a technical case here, Joseph, at 5,500, 61 to 55, subtract 6 from 55, you got 49. Okay.
Mm-hmm.
Now, this was a breakout, right? All the
Yep.
way back here at 4,800,
Yep.
and we're testing it. And if you get a breakdown under 48, that's 1,300 handles. That could take you down to 35. Technically, just some measured move. Just something that's the geometry of it here.
Seems like that would be a really good buy if it got down there.
Yeah,
In the trajectory. I mean, if
yeah,
you had such a big event, you would have big
yeah,
policy moves that try to counteract that, and
yeah.
that usually makes the market
But
go up.
it's not how it gets to a price sometimes. Do you agree with me? It's not just the price, it's how it gets there. And when you have this kind of momentum, the intensity, if it would have grown, I didn't expect these levels until June when I was looking at it up here. I
Hmm.
figured I didn't expect early April. So the speed of it tells you that it's a car wreck, and the market's in shock right now, don't you
It
think?
is. It is. And if you look at history, sometimes we do have big declines, right? So, like
Yeah.
1987 and so forth, big declines happen. We just haven't really, well, actually, well, we saw them during COVID, so we should have some conditioning here. But yeah, that is possible. I think a lot of people are newer traders in the market, especially people who started trading during the pandemic, and this may be a shock to them.
Do you, I don't think we've ever talked about it, Joseph. Do you have a view on Bitcoin? Do you watch it? Do you trade it? Does it mean anything to you?
I am a no coiner, and I think Bitcoin is a very dangerous and volatile asset. I would, yeah, that I'm gonna leave it at that. I know
All
there are
right.
many people who view that religiously.
Okay. And you know what bothers me the most about this sell-off? This.
Yes. Ooh, okay. That doesn't look good, right? Doesn't look good.
Yeah. All the banks look like this. So, and the credit spreads blowing out. Do you think that and the way the bond market's acting, are we either going to have our gilt moment, or are we going to have major credit issues, and the banks are going to have to take write-downs that could lead to something systemic or failures?
So the credit spreads have been widening, but if you zoom out a bit, they're not like surging. They are a little bit higher than they've been in the past few years. I mean, if you look at the tightening cycle we had in 2022, they're about there. Now, the good thing about credit spreads is that rates are around, above 4% right now, right? So
Yeah.
if credit becomes a problem, you could have the Fed cut, and that directly reduces the interest expense of all these guys. So
Yeah.
there is a very easy lever to pull to help with that. So I'm not worried about that right now. And we do have liquidity issues in the bond market, and there are also ways to fix that. What I worry about is things that are not as easily fixable. So
Like the junk bond market?
no, that's interest rates too, right? You can
Okay.
just move interest rates lower.
All right.
Things like
They
the
look like
strength of the currency and so forth, or having huge foreign investor exodus, maybe central banks moving out of the dollar. Now, those are things that are not easily fixed, but the Fed can fix it, and the Fed is able to act quickly.
Do you think the Fed is behind the curve and stuck between a rock and a hard place because of a dual mandate? What do you think they'll do? Will they be market sensitive if we start breaking down under 4,800? What's going to be the catalyst to get them to say we have to start, and maybe they can do QE without lowering rates?
So I don't think the Fed is in a hard place right now. You're right that many people are worried about the inflationary impacts about tariffs, and certainly you hear that over and over again. But if you look at what the market is pricing, it's pricing a surge in inflation this year, but then disinflation next year. It's very concerned about a recession coming in. So what could happen, and what the market is pricing in, is that, oh, we have tariffs, and so prices go up this year. But then afterwards, we have a recession, and then basically inflation rate goes down. So it's a one-time upward shock to the price level. Right now, if it's like this, and I think usually what happens is that the central bank would look through these one-time shocks to the price level. Inflation expectations, according to consumer surveys, have been rising, but I think that's going to go back down once lower oil feeds through to gasoline, and of course, everyone begins to worry about a recession. So I think the Fed is going to act to try to do this. The question, as you note, is what's going to take them to do this? So I think we could have a May cut, because simply we have so much concern in the market and among the business community. And later on, I think we're going to get some more concrete slowing of the data, either a rise in unemployment or just worse survey data and stuff like that. And that could prompt more rapid cuts. I don't think that we're going to get QE until rates are zero. But if the Treasury market does malfunction somehow, the Fed is going to come in and kind of calm things down a bit, kind of like what the Bank of England did when they had their gilt market disaster.
Right. I mean, this looks the way it's acting right now, like it wants to, 10-year wants to blow to new highs and yields.
Yeah, that's so when you look at yields,
counterintuitive with what's happening.
when you look at yields, part of it is the path of policy, but that hasn't changed. So what's really been changed is just some supply and demand dynamics. It could be that, there is some deleveraging in the financial system. It could be that
Yeah.
you have sovereign selling. I don't know,
Yeah.
but it is a dislocation in the market. And that is something that if it continues, I think the Fed will want to do something about.
Okay. All right, Joseph. Well, I want you to have a chance to, maybe I'll do it. I'll show your stuff and your site. And Joseph has a great YouTube channel, and he does a weekly to pay attention to, a weekly video. So something that you should definitely include in your intelligence gathering. As you can see, I could ask him anything about any market, and Joseph is on it because he's stalking trading opportunities too. Here's his website. Okay, finding the strike. Okay.
Thanks so much.
All right. Well, Joseph, good hunting. Let's just remind people that at times it's not the return on equity, it's the return of equity.
Yes, guys, stay safe out there. This is a
All
very,
right.
very treacherous environment, and
All
happy
right.
trading.
Well, you too, buddy. All right, Joseph Wang, everyone follow him at Fed Guy 12. That's going to be a wrap for me. You guys enjoy it? Did I ask him the right questions for you? Did you hear what you wanted to hear? Huh? Laura? Okay. Yeah. All right, Rick. Well, thank you guys. All right, you could join the team in about 19 minutes on the morning edge. So take what Blake says seriously, and you need a team in these markets. Okay, you need a team, and they have a pretty good team in the chats here. So that's a wrap. Don't just count your cuts, and I'm talking about Fed cuts. Don't just count your barrels of oil. Keep an eye on oil. Conservatively, don't do anything till it's back above 61, 62, but keep an eye on it. I think something's happening there this month, but I've been, wrong about that for a long time too. Anyway, it's not a trade. Have a great day. Adios, everyone. Hasta mañana. See you, Laura. See you, Marcus.